Hello guys. So we're on video 4 and today we will talk about when to buy, sell or exit early in prediction markets. In prediction markets, you don't have to wait for the final verdict to make money. The best traders rarely do. The secret? Knowing when to get in and when to get out. Today, I'll show you how smart timing can mean bigger wins and way fewer losses. So, welcome back to the series. In the last video, we nailed the basics. Yes or no, how it works, how to read prices, and I hope you remember it. But today, we are unlocking the next level, timing your trades. Because sometimes the best move is selling long before the market closes. I know I like to do that sometimes. So what do we mean by that? Firstly, always remember, if you buy early, you'll have a bigger edge, right? Right when the market opens, the prices are always cheaper. And markets reward early movers. Before news hits, prices are cheap. For example, let's say the market is whether Team A wins World Cup. It opens at 20 cents. After a big win, it jumps to 70 cents. Because people are now expecting that there's a higher chance for them to win, right? Early birds don't wait for resolution. They sell into hype and cash out. So if you knew this already, if you would have been in the market early, so before the news came out, you would have already done a good deal of profit. Second, sell early to lock your profits. Basically, if you bought yes at 40 cents, now it's 80 cents, you really don't need to wait until the final whistle. You should take the win and avoid last-minute cures or bad calls. So the rule is never let greed turn a solid win into a painful loss. In fact, we say this is a rule of thumb, always, right? Never let your greed turn into a solid win into a painful loss, ever. Thirdly, avoid chasing late moves. So let's say if yes is at 95 cents, your upside is tiny, but your risk is huge. So sometime in such a situation, maybe, just maybe, the best trade is no trade at all. Unless, of course, you're very sure of the probability of something happening. And that means you're 100% sure. So to think like a successful or a good trader, think in probabilities, not certainty. Price shift as new information drops, right? And you've noticed that. It is almost true for almost every market, not just trading. So don't get married to your trade, ever. Update your belief system constantly and exit when the market disagrees with you. It's okay. Fifth, now understanding bid-ask spread. So maybe let me take you through a market. So over here, if you'll see, will Yannick Sinner win the US Open, correct? So over here, if you see, there is a gap between the buy and sell. And it's almost a 15-cent gap. So that's your hidden cost. So in this, what do you do? Put limit orders. When you put limit orders, it's like firstly, buying at the price that you want to buy it, correct? For example, right now, this is at 70 cents. If I put a limit order at 65 cents, I'm buying cheaper. So even though there's a high probability, I feel like in the future of it, like Yannick actually winning, today, if a news drop, let's say, is injured or something, maybe the price of the trading drops down. So in that sense, you can actually, cash out and be profitable, right? So use limit orders, especially in thin markets. And I know it might be counterintuitive, but to be very honest, when new products are launching or new markets are launching, that's your best edge in order to earn very safely. Well-functioning market as well. But usually a lot of products right at the beginning are, incentivizing limit orders, so creating markets. So do that. That could be your edge. Now, when you're trading, you also need to understand how the market psychology is, right? Like what are the patterns? So for example, during hype cycles, price pumps fast on big news, often overshoots and then cools off. Or if you talk about recency bias, if there's a one big win, everyone suddenly thinks they're unbeatable. Correct? Like this, we all have seen, at least I do. So be conscious of that. And if you're conscious of that, you might as well figure out a way how to get alpha from trading in this way. So an example, a team wins once. Their championship odds moon, even if fundamentals haven't changed. In fact, we could see that in, I think this was PSG and Chelsea, unless I'm wrong. Everybody expected PSG to win in the World Cup, Club World Cup. But I think it was just completely proven the other side. What's the seventh one? You should have a risk management framework. So, of course, whatever I'm saying here is not financial advice, but I would usually follow a rule of thumb. So, follow the 1/3 rule. Take 1/3 profit at 2x, 1/3 at 3x, and let the last piece ride. So, basically, think of it this way, that you should never risk more than you can afford to lose on one market. Spread out your bets or trades, diversify, and don't go all in on a single short thing. This is true for every kind of trading, not just prediction markets, everywhere on planet, right? So let's say day 1, buy low on early indicators. Day 15, first big development happens, some news occurs, and the price is shot up now to 45 cents. Sell it, right? Sell half of it, not the entire one. Day 30, more confirmation comes. Remaining position now is at 65 cents. Exit now, right? And 3 to 4 times profit without ever waiting for final resolution. That edge is coming from your information timing. Understand how the information moves. That's exactly where you can really win, right? So I would say always think certain critical questions before any trade. Like, what would change my mind about this trade, right? What info could move this price by 20%? Am I trading like an informed investor or just gambling on vibes? So understand that this isn't betting, it's informational arbitrage. And your edge dies the moment everyone else knows what you know. So this is another place where prediction markets offer you the edge, because especially if you have information, let's say I have a lot of information on the F1 markets. I know how McLaren's engine works, how they are technically, who the drivers are. This becomes my edge because I know I have historical information, today's information, much better than anybody else, right? And now another trader who comes in, they might not know the information. However, once they read the news, McLaren has, launched something new, everybody would want to trade that market. So, you see, you already have the edge if you have the knowledge in prediction markets, which might not be possible in other markets. So don't just ask, right? Am I right? Ask, when do I log this in? Now, as I come to the end, I feel there's certain things which we've learned, or I've tried to share with you. Timing is everything in prediction markets. And the biggest winners often sell early. They're not just right. They're smart about exits. And I hope you're a bit more conscious next time when you're trading. And remember, limit orders, they are your edge. I'll be talking about it more in the upcoming videos. However, in the next video, we'll talk about position sizing, how much to bet, so one bad trade doesn't blow up your account. It should not. So please do subscribe, drop a like if it helps you, and let's keep stacking wins.